Something unusual is happening. In the third quarter, a higher than usual percentage of companies reported profits that beat analysts' expectations, but a lower percentage than usual reported revenue that beat expectations. What that means is, we saw more companies than usual delivering higher profits, but in many cases it wasn't because they sold more stuff. I'm going to explain how we know this is happening, why it's so unusual, and why this could be a worrisome trend for the stock market and the economy. Over the past couple of months, almost all of the companies in the S&P 500 have released earnings reports, detailing how much money they made or lost during the latest quarter. Take a look at computer software company Oracle, for example. Oracle starts its report by saying how much revenue the company brought in, and then details how much they kept in profit. They break that profit down into earnings per share, or EPS. That shows how much profit they made for each share of stock available for purchase. Let me explain these terms really quickly. Revenue is how much money the company brings in, largely from selling its products. Profit is how much of that revenue a company keeps after paying for things like taxes, employee salaries, and rent. As for expectations, market analysts who cover these companies for a living make a projection of how much they expect them to have made in revenue and profit. Those estimates are based on what the company has said, economic data, and their own research. With more than 95% of all S&P 500 companies having reported their earnings, we saw 82% beat their EPS estimates. Over the past 5 years, an average of 77% of companies beat estimates, and the average is 74% over the past 10 years. So the third quarter was historically strong for profits, but for revenue, we saw the exact opposite. Last quarter, just 62% of companies beat their revenue expectations. That compares to an average of 68% over the last 5 years and 64% over the last 10 years. Normally, you've got more companies beating profit expectations than revenue expectations, but the numbers are pretty close. Over the past 10 years, there's been an average of a 10 percentage point difference. But this year, the difference is double the historical average, 20 percentage points. That's the biggest difference since 2015. And of all the companies with revenue below Wall Street's expectations, almost 3/4 of them, 73%, beat their expectations when it came to profit. Paul Leinwand, a principal at accounting firm PwC, told me, cost-cutting has been a significant theme over the last several years, as organizations have struggled to boost performance based on organic revenue growth. He says that a lot of organizations have approached cost-cutting in a way that is, quote, not consistent with driving revenue growth, but just taking cost out. Here's what's been happening. Because of inflation, companies were able to raise prices pretty significantly over the last few years. Paul says that for some industries, like consumer packaged goods, pricing has accounted for up to 90% of total growth. But as inflation has slowed down, fewer companies have been able to continue to drive revenue higher by raising their prices. They've instead resorted to cutting costs to deliver on the bottom line. That has usually meant reducing investment and growth, sometimes by stopping new projects, and other times by pulling back on hiring. This is strange to hear, given the strong numbers we've seen from the US jobs market and consumer spending. But Paul says the numbers don't lie, and he says it's all about uncertainty. Even though we didn't get the recession that most economists and Wall Street investors predicted in 2023, lots of companies still behaved like we were in a recession by cutting back their spending. The stock market has rallied this year, with the S&P 500 still up double digits and the NASDAQ up more than 30%. But when companies don't invest in themselves because they're worried about the future, it's hard for them to grow. And growth is what the stock market is supposed to be all about.